Hello everyone, this is Jesse Kovacs coming to you with your educational economic update for November 2016. In this month's video, we'll discuss some of the major headlines that influenced the markets in October and give you some insight into what they can mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement. Now, I want to start this month's conversation with a topic that's been on everyone's minds, and that's the presidential election. I think we can all agree that this has already been an unusual election season. And then, in keeping with the ongoing surprises, on Friday, October 28th, FBI Director James Comey sent a letter to Congress indicating that the agency would be reviewing more emails from Hillary Clinton. Now, the markets have reacted to this curveball with increasing volatility with the S&P 500, with it hitting its lowest point since July. But when you look past the current volatility and you dig into the October markets, you'll see that the underlying data is just much more positive than the recent volatility and the media hype would lead you to believe. In fact, the same time that the markets were reacting to the FBI's announcement, we also learned two very important details that show that the economy is growing. Those two things are gross domestic product and consumer spending. First, the gross domestic product, or what we call GDP in the financial markets, beat expectation and had its biggest gain in 2 years. This result means that the economy is not only growing, but at a faster clip than most economists actually predicted. Second, the most recent consumer spending report from September showed it had grown 0.5% to reach an all-new time high. Personal income also grew at 0.3%. So in other words, people in the United States are earning more money and they're spending more money, which is good news for the economy. Now, I'm not saying that everything is perfect in the markets, but I do agree with economist Brian Westbury's description of the current situation as a plow horse economy. You see, unlike a racehorse who's fast and flashy but can only maintain speed for so long before breaking down, a plow horse just plods along one step after the other, and the motion is slow and it's less exciting, but plow horses have stamina and strength that their other brethren just lack. Now, as we look forward, I expect this plow horse to just keep moving along. The election will likely continue to cause some market volatility in the near term, but even less eventful elections also typically cause volatility because the markets just don't like uncertainty. That's the reason. Remember, the economy really is growing. It's still continuing to grow. In fact, 86% of respondents to a recent CNBC poll believe that the Federal Reserve will raise interest rates at their next month meeting. Another strong indication that the Great Recession is getting farther away with each passing day. We might not have a completely smooth ride ahead. There may be some turbulence, but I believe we are still steadily moving in the right direction. I know that headlines and media hype can be disconcerting, but as always, we here at the Kovacs Financial Group are here to keep you informed and share the information that you need to have a clear view of where we stand. Well, that's it for this month's Educational Economic Update. Once again, this is Jesse Kovacs with the Kovacs Financial Group, signing off for the month of November 2016. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation with us, please give us a call here in the office at 732-306-8100. We'd be happy to talk to you and happy to help you. Happy Thanksgiving to all of you. Take care.